Hi, this is Chris German. Welcome back to the Apartment Dealer Show. I'm proud to announce we're launching our Legacy Builders interview series where I go out into the marketplace, interview current or past clients of the apartment dealer, individuals that I've worked with, individuals who own multifamily properties, to hear them in their own words discuss their journey in terms of owning and managing multifamily properties. And then depending on who we're interviewing, they'll have their own strategy, their own take. They'll be in a different phase of the investment cycle. But again, it's to shed some light on the real life experience of those individuals that own and manage multifamily properties here locally. Today I have with me my client, Don. Don and I have known each other for the better part of about 15 years. Don and I and her son first met at one of my educational events, actually the first educational event that I ever hosted that was at a small steakhouse. Don and her son were there, and that's how we got to know each other. And then the relationship built from there. And we're going to move on to discuss Don and her owning and managing her portfolio, eventually going through a 1031 exchange and then to where she is today. So Don, welcome to the show.
Thank you. Glad to be here.
Thank you for being with us. I think this will be very helpful to the viewers, those that are landlords, those that have never executed a 1031 exchange, and they're where you were a few years ago. But first, I think the first logical question is, why multifamily properties? When there's a lot of different asset classes, different things you could invest in, what made you invest in apartments?
The first reason why I invested in property ownership and in multifamily was that I felt that there were three things that would help me reach my financial goals. And that was, it would offer me an increased monthly income first. And then secondly, I would have a hedge against inflation because property inflates. And the third reason was to have some tax shelter incentives that owning property offered. So that was the initial reason for my
That was
investing.
the motivation behind investing.
Yeah.
And that's pretty good, because I'll tell you, many clients we meet with, their answer would be, well, I saved a few dollars and I thought owning, everyone says owning real estate's a good thing, and so they just give it a try. But it sounds like definitely you went into it understanding some of the basic pluses to, owning, especially multifamily properties. And were you a working woman at the time you started?
I was working. And one of the things that I realized, even at a young age, was that I had to figure out a way to make my money work for me rather than me always be working for my money. I felt that investing in income property and multifamily properties was a way that I could do that. I think the average person can do that. And that was what was intriguing to me, is that you didn't have to have any special skills. You had to get knowledgeable about real estate, but you didn't have to have, special skills. I think anyone that wants to can earn a better living through multifamily investments.
And when you started out, did you have like a blueprint and resources and a well laid out plan, or was it more luck and chance as you got started?
I think always luck plays a little bit of part of real estate, but no, I definitely had a blueprint. My parents owned income property as well, and so growing up, we lived in the apartments that my parents owned. So I didn't know if you knew that.
No.
So I got to watch my parents, deal with tenants, doing leases, fixing things when things went wrong in the apartments. I helped clean, paint empty apartments with them. And when I turned 19, I actually moved into one of their apartments and managed it. So I managed an 11-unit building. So I got some practical knowledge about that. And my around the dinner table at night, my parents always talked about real estate investments and finances and stuff. So I think I was lucky in that sense as well, that I had a little bit of knowledge going in.
Well, sure.
Yeah.
And that's one of the things we always ask our clients is that, hey, you assume your kids are happily going to take over a property or a portfolio of properties, but one, do they really have the interest? Two, do they have any insight of management? Have they been involved at all? Because if not, oftentimes then the kids will inherit it and say, we'll just sell, because they're not used to the phone calls and the day-to-day management and everything. Yeah. Now, Don, what would you say is the biggest challenge investors face to succeed in multifamily? What would be that biggest challenge from your viewpoint?
Well, I know from my experience when I talk with my friends who always say, oh, I wished I would have done what you did, or I wished I would have invested in real estate. I think courage is a big obstacle to overcome, just taking that first step and making the decision to invest. But after that, I think understanding the climate in which you're investing in, understanding in real estate and understanding how to deal with tenants. There's a lot that goes on to investing, but I think having a good team behind you, finding a good real estate agent and a good real estate team is very helpful. So I think, but courage is important.
Now, so sticking with that courage theme, many investors, like I alluded to earlier, they say they buy one property and they feel blessed just to have been fortunate enough to say, just buy one property, because in their personal circle of family and friends, typically they're the one that's doing really well because they own investment property. Maybe they have, say, 2 properties. But to then go from there and say, okay, one, I think they question themselves, well, was I smart or was I lucky? And the reason why they stay there is because then if it's suggested to them to do a 1031 exchange like you've done, courage, they lack the courage of going from what they know, the initial property or properties, the complacency and everything else. But it's really taking that step in faith. So for yourself, I come into your world, we meet. At the time you had 2 separate multifamily properties. We begin to discuss some options. You eventually go through a 1031 exchange, which we'll go through some of those details. But what was the motivation behind the exchange? Because obviously, you were doing well when we meet, comfortable, but what was the motivation?
Well, I had owned that property, as you know, for a long time. And when I went to several of your educational luncheons before, I invited you into my home to discuss all of this.
Right.
But when I finally felt like you were the person I wanted to work with, my motivation was, the main motivation was I'd owned the property for so long that I had no more tax shelter.
No more depreciation.
No more depreciation. That had gone. But I was still comfortable. So I was fearful that I wouldn't have that monthly income going forward. And I think as knowledgeable as I thought I was, I realized that I had really no idea what my property was worth. I bought that property that you exchanged with me, the 9-unit building, for $126,000.
Which is a song today. When you think about 9 units, sure.
That's not even a down payment now. But when you told me that you thought, after looking at all the financials of my property, you came up with the sales price of $2 million, I about fell off my chair. I didn't. So, that was encouraging. And I felt like then that would give me a good enough down payment on something that we were to buy that would allow me to at least be close to what I was making on a monthly income, because I'd, begun to depend on that income. So that's what encouraged me, was then I would not only have maybe that monthly income, but again, I would then have some more depreciation to work against my income.
Which means
tax shelter.
You keep more of the income.
More of the income.
Right. So in other words, even if typically we always see our clients increase their income through a 1031 exchange, which was your experience too. But even if someone were to go sideways, the income on the new property is the same as the old, to your point. But now you have depreciation that you didn't have before. So you actually are going to keep more of that money after taxes, which then puts you ahead of the game.
A better situation, yes.
And to your point about the analysis, not knowing what your property is worth, you shouldn't feel bad, because many investors that I meet and we counsel with, they have no clue. They've never, not once, had an evaluation. They have realtors calling them saying, hey, you should sell because it's worth this or that. But they've never really sat down to have an analysis done to see what their options are. And to me, that's surprising, because any other investment we have, if it was stocks, bonds, whatever, you get a monthly statement, at least an annual statement. And if it didn't show up, you'd be calling your financial advisor saying, hey, where's my money? And yet, for many investors, real estate is their largest investment, yet they don't have anything on hand to really substantiate what's my rate of return. How's the property performing? Which again, it's their approach. Now, we discussed the exchange, and as you mentioned, you had come to several of our educational events. What were your main concerns about trading the properties you knew so well and actually doing a 1031 exchange?
Well, again, I knew what I had and I knew what I was working with. And so I was initially just, again, afraid of not making that monthly income. And basically that was it, because I depended on that. And so it was encouraging after we went through all the numbers and how I still would be able to make that monthly income and have that tax shelter. It just, again, it took the courage to do it. I had been so complacent for so long, owning the property for such a long time. And I know that you've discussed this on previous podcasts, that I had a lot of my tenants on the payment plan, because I watched, they moved in, I watched their kids grow up, I watched their grandkids grow up. So we were, I knew them personally. And so when I just let them pay however they wanted to pay. But one of the things that I really am glad about with the exchange was it allowed me to take a step back from actually doing the day-to-day work. I make enough profit now on the property that we exchanged into that I can have an off-site manager that does a lot of the dealing with the tenants and the collecting of the rents, and I'm not actually face-to-face with my tenants like I used to be. So that's one of the biggest benefits from trading up.
So a couple of things then that I hear is, so you got to start over in terms of your interactions with the tenants, where before you were too close. Okay, so now it's a new property. Now I'm going to be more business-like,
yes,
because you had to learn. And that's funny, because I had somebody tell me a joke where that's why sometimes you might move residences, because at your old house you messed up the relationship with all the other neighbors, and so now you get to start over, right? So kind of along those lines. And then two, aside of moving into a property that had more units and more cash flow, the cash flow not only added to your lifestyle, it added to, in terms of income, but it added to your lifestyle because now you could be removed from the picture almost completely. I know you still take an active.
I do, because I was so hands-on for so long that I still am very watchful of my manager and still give him, direction, like on which plumber to use, which cleaning people to use, and all of that. But I have more freedom because I don't have to be there on the first of the month all the time to do all the collecting and all of that. So yeah, my lifestyle has improved because of that.
Having gone through the 1031 exchange, so you shared the punchline that not only did you sell one building, you actually sold two buildings to get into the larger building that we had found as the ideal exchange. What was your experience through that process, and would you do it again?
Yes, absolutely. Absolutely would do it again. It put me in a much better situation. I have a better asset mix. So with the other units, one of them was located in Pomona as well, but it was studio units. And so I have no studios on this one. So I have a better asset mix and
big units.
Huge units. They're big. When I first hired my cleaning people, they came in and they had quoted me a price of $150 to clean the unit, which they always charged me before. But then they went in there, and after they cleaned, they said, "No, it's $250. It's too big." So yeah, I mean, the closets are huge, the bedrooms are big, and even my one bedrooms have more than one bath. So that's always nice for a one bedroom. But yeah, absolutely, I would do it again. The experience was not as frightening as I had anticipated. We had time to identify a property. Back in the day when we did 1031 exchanges, they had to close concurrently. I don't know if you are old enough to even know that.
Before my time.
They had to close concurrently. So the fact that we could have time and to find a unit that would fit what I would like was nice and encouraging.
Yeah. And the way we built that calendar out, because that is one of the fears that many landlords have is, okay, Chris, you've convinced me of all the benefits of an exchange, but what if I cannot find a replacement property? Now I'm going to be out there just buying whatever so that I don't have to pay the capital gains tax, and that's not really what I'm looking after. And so there's a way to strategize. There's a way to build out the calendar. And in your case, we're able to sell not but one, but two assets and give ourselves all the time we needed, essentially, to find the end property.
And we actually had more time. We were able to do it before the time ran out.
Right.
Yes. Yeah.
And so now you're on the other side of the exchange. You've been through that experience. You have a few more years of managing a larger asset, which a lot of people sometimes are fearful of because they think, oh, well, bigger properties mean those tenants are somehow going to be different than tenants in a small building, meaning it's going to be more headaches. But you've been on the other side of this for some time now. What advice would the current Don give the old Don in terms of the exchange, looking at your options and so forth?
Yeah, I would say that, again, don't be afraid. Do the exchange. You have time to find a replacement property. And what I found through owning more properties is actually it's less work. When you only have a few units, you have to be more hands-on because you don't have the financial ability to hire someone else to do it. And also it's better for you to learn so that when you do have someone else that can manage it, you can make sure that they're doing a good job. But it's less work. And also, if you have a vacancy, like if you own 18 units and you have one vacancy, it doesn't hurt as much as when you own 3 units and have one vacancy. It's just a lesser of a percentage that you're losing. And so it becomes actually, I think, easier as you own more units, which I didn't realize when I first started out.
Yeah, when I first got in the business, I just happened to befriend one of the largest owners here in the San Gabriel Valley in terms of apartment ownership. And he told me just that Chris, it's actually, by owning more units, it's actually less work than when you own a small little 4-plex, 5-unit, 6-unit building. And I always thought, well, no, because don't like the problems multiply. Isn't everything just exponentially bigger? And it's not so. They say exactly what you said, is that there's more reward for everything involved, your time, money, and what have you. And because the properties are kicking off more cash flow, you can hire third parties to alleviate yourself of some of the work. And when there is a vacancy, it's only a fraction of your income. If you have a 5-unit building, there's a vacancy, that's 20% of your income.
Absolutely, yes.
You own a 20-unit building, right? So it's a much different thing.
What I wanted to say was navigating through COVID with all of the restrictions and everything that were put on for owners, I don't know how well I would have been able to manage that with the fewer units that I had. I was able to manage that much better owning more units. Thank goodness we just bought that, we exchanged into those units right before COVID, only a year before. So it was a good move.
Yeah.
And just in the nick of time.
Would you encourage other investors, or what would you tell other investors that are where you were? They own a property or two, they're doing okay. If they do nothing, they'll be okay.
Yes.
But what would you tell them? What would you encourage them to look at in terms of their options?
Well, I would say that if you've owned a property for a long time and you're just sitting on it and you're doing well, it's probably worth more than you think it is. You're probably running out of depreciation. And so there's so many benefits to doing the exchange into more units. And initially when I first started out, I was doing it just to make sure that I was financially sound. But what I've now, having grown and have a family now, I want to leave a good legacy for my children. So, who are adults now, but to my children. And I think that exchanging into a better asset is also going to be better for my legacy to my children. So I think that you can do more. You're fine if you keep what you have, but you can do more if you are so inclined.
Well, and to your comment about your children, your heirs, it's, they're going to need more, I say this all the time, they're going to need more money in their lifetime in order to create the same standard of living that you've enjoyed. That's just a matter of fact. So you really set them up to win. By expanding the portfolio, it means even if they end up selling at the end of the day, you've now increased the sizable portfolio that they will be able to sell that's tax-free, unless they breach a certain threshold. But for many, it'll be below that. And so you really have set them up to put them in a better position.
Which is what we all want for our children, right? We want and a better position, and then also be able to, it's harder now to buy a house than it was when I was young. So they need that. You can help them along their journey.
What's next for Don? Where do you see things going from here? What would be ideal for you as on the investment side?
That's a good question, Chris. That's something we need to talk about.
Sure.
On our own, but I'm having to decide whether now at my age, whether I want to exit now at this point or whether I want to continue to grow. And I think that I need to stay in the real estate market with what I own just a couple of more years to see where the real estate market is, what my options are at that time. But so right now I'm undecided really about where I want to go, but I'm researching different options. And you're one of my biggest, resources for that. So I'm trying to decide what will be next for me. But I do want to keep the units that I have now for at least a couple more years. I haven't owned them that long. So they need to appreciate a little bit more.
Sure.
Yeah.
Those are two different lanes.
Yeah.
Exit and retire or look for an exit strategy versus, hey, do another exchange, grow, get bigger. Those are two completely different things. So I think we need to chat to clarify what's really the end goal. What is it that you're looking to achieve? Because those two avenues lead in two completely different destinations.
Yeah.
Yeah.
So I'm undecided, and we do need to figure it out. And but we have a couple of years to do it. Yeah.
Sure. As other people look on, how does Don want to be remembered or thought about as an investor, as a landlord?
So this is interesting. As you know, I've been dealing with the city council members and the mayor of Pomona, which is where my property is located.
So let me give you a little background, because why that's so important. It's not like she's just rubbing shoulders with the elites.
No.
In the city of Pomona, they determined, they being the politicians, that statewide rent control, California statewide rent control was not enough. They knew better, and that they should limit rental increases and put more tenant protections in place, essentially cutting what a landlord can raise rents to by about less than half of what the state rent control ordinance calls for. So this went into effect a little over a year ago now, I think, the temporary ordinance. And Dawn has been very active in voicing her opinion to the politicians. You forward me, some of those emails. And I know I want to let you share what's been the experience, but to Dawn's credit, a lot of landlords are griping about rent control, griping about tenant protections, griping about the eviction moratoriums. But how many have actually even done something as simple as send an email? We're not saying drive down and go to the board meeting. We're saying how many have actually just voiced their opinion? Unfortunately, not a lot, because I've had clients go to some of these meetings where there's going to be a discussion of rent control. And they report back to me, Chris, there's 100 tenants in the room and 5 landlords. Well, if you're the politician, then you think, oh, well, the landlords must not be, that bothered by it. And after all, we got to look out for these tenants. And so anyways, you've been very voiceful. I want to set the scene.
So I was, so I wrote emails to them because I feel that they're putting the whole housing problem on us. And I feel like our property rights are being infringed upon. I feel like they're stripping us of our property rights. So I, wrote to the mayor, and actually, they actually set up an appointment with me, and I did a video conference through Zoom, I think it was, with them. A few of them. There was a mayor and I think 6 or 7 council members, and so we I tried to explain to them that I didn't feel that rent control was the way to fix the housing problem. I didn't think that it was going to help the homeless situation. It just pretty much affected only the current tenants at the expense of the future tenants. So, I was explaining all of that, and I think what was really interesting was the way that I think I would want to be remembered, which was what you originally asked me was I think it was the mayor actually that said, well, you sound like a savvy businesswoman and you fall on your feet. I guess that's how I want to be remembered, as a savvy businesswoman who falls on her feet.
Sure.
So, I needed to voice my opinion, and because it's important that we get involved. I think as owners, we've always felt like we're either busy, working and managing our properties, that we don't get involved in the politics of it. And but I think especially now, we need to at least do some pushback, because it's getting more difficult for the small business owner as a property owner to advance. And I think if things keep getting as bad as they are, it's going to be even more difficult for the small investor, and it's only going to be the big conglomerates and big property investors that can navigate through all of their rules and regulations. So, and
that's a big motivation behind, especially like the live educational events that we do, because at least we're trying to arm the average investor, the average landlord, with the information, the team of professionals that can assist them wade through all the different changes, because there's been a ton, especially ever since COVID. That's what we try to do. So that event that you first were at, that was more of like a Q&A between the landlords and the speakers. Now it's really about making sure everybody's informed. No one can claim ignorance that, hey, I didn't know XYZ, and not just Dawn fall on her feet, but all of us need to have a firm foundation in terms of, hey, this is what these are rules are, and this is how you have to pivot. And I think that with like your team of experts, I think there's always going to be a market for us to invest in. I think owning property is still one of the best investments you can do. And so I think with the team that you surround yourself with and give us access to, helps us to navigate that. And that it is getting more difficult. So thank you for doing that for us. Yeah, no, it's our pleasure. So you are a legacy builder. You've spent the last 3 decades now building a financial legacy for you and your family. Although married, you've been doing this primarily like as a single woman, if you will. So that's one thing that I also want to commend you for. But through this journey, how has the apartment dealer helped you on your journey here of building that financial legacy?
Well, the first thing that you did was fed me.
Right.
So that was wonderful. And you've given us, access to these wonderful professionals that can give us, arm us with the information. And what you've done personally has given me the courage to help me take that next step. Although I was very willing to do it when I was young, as I owned those properties, I became complacent and forgot to keep growing. And so you took me to the next step, and I'll be depending on you to take me to the next step, whichever way I go.
Sure. Well, we look forward to
it's been a pleasure working with you, and the fact that you take the interest in helping us reach our personal financial goals individually. Like, you don't put us all in a peg that we all have to fit into. You understand at least in my experience, you understand my particular situation. And yeah, I have done it all on my own. I've been married twice, and so I started on my own, and I'm continuing on my own. But my husband is very supportive of everything that I do. Yeah.
Excellent. Well, thank you, Dawn. Thank you for your time. I know that the viewers are going to find a lot of helpful information here. And I hope you enjoyed this first edition of our Legacy Builders interviews. There's more to come. Share a comment below. Is this the type of content that you're looking for? Do you have a question? Do you have maybe a question that you would want to ask Don? And maybe we could share that with Don. Be sure to subscribe to our channel, give this video a like, share it with all the investors that you know. We want to make sure we get the right information at this time into the hands of the investors so that they can be equipped to not just survive in terms of owning multifamily properties, but to truly, truly thrive. And again, Chris German from the Apartment Dealer, wishing you positive cash flow, tenants who behave, and much protection from Uncle Sam. Till next time.